Hey guys, what's going on? So here's 13 market moves, 2024 base case scenario. We're going to take a look at the macro strategy, and then we're going to explain to you specifically which one of the moves are the most advantageous to trade in 2024. So therefore, if you focus on studying those moves out of the 13 market moves in the formula, you will be able to nail some killer trades. So our base case is stagflation, guys. For those of you that are familiar with the term, you know that inflation combined with a deceleration in growth and margins and higher unemployment is basically a description of stagflation. So the reason being, we completely disagree with the general view of the Federal Reserve, and we believe actually, besides 2024, known as the year of stagflation, it would also be known as the year where the Fed entirely loses its credibility. So, why would the Fed lose credibility in 2024? It's quite simple. Technically, the loss of credibility by the Fed has already started. Why do we say so? Well, Fed keeps advertising this inflation target of 2%, which we've told you over the last year, it's absolutely impossible, okay, for the Fed to achieve a 2% target as far as the inflation concerned. In the last couple of meetings, okay, Fed clearly paused the rate hikes despite of them actually not hitting the target that they're aiming. So all of a sudden, out of the blue, the whole world thinks that Fed has conquered the inflation. The reason we believe Fed is nowhere to be conquering inflation is because you have to look at the type of inflation that Fed is trying to conquer. The type of inflation that's being created recently, okay, is just in the inner state. It's in the early inning. It's in the beginning. And the type of inflation that we're referring to is the political inflation. It is created by all the political bullshit in the world. And the United States is the culprit behind every war that has been started worldwide. Out of 241 wars, the United States has started 221 of them. And all the recent wars were also started by the United States. So until that trend of heading into World War III is resolved, which that's not on the horizon, the political inflation will increase. The supply chains that are broken, they are going to be broken in a much more severe way. Considering that the United States basically doesn't make shit anymore. Everything they're buying from outside of the United States, practically 95% of goods that the United States consumes come from China, Vietnam, Europe, everywhere but the United States. So any product, like a physical good that is consumed, okay, is going to cost more, not less. As long as we have these political wars and the political situations all over the world continuing, which there's no light at the end of the tunnel at the current conditions, things could actually get much more severe. So good luck with oil going lower. Even if the demand for oil drops, which it can in 2024, that's for another video, okay? Oil, based off this complete deglobalization that's taken place, okay, oil prices should maintain itself. There's actually a probability oil prices could head to $200 in 2024. The probability of pricing on physical goods increasing, I would say, is 99.999%. Okay, if you combine this process of deglobalization, which has started over the course of the last 24 months, it is fixing to accelerate. And there's one very valid outcome, which is already a fact, because if we're to look at the chart of the USD, it already lost a lot of value. So let's glance at that real quick. Okay, so here's United States dollar back in 2022. We've nailed the stop right here at 113 on the dollar. Since then, multiple bounces. We predicted the dollar was going to continue to drop, with the exception of a couple where we caught some nice bounces on the dollar. So at this point, the chart is in a pattern of a death hook formation. There's a clear path. There's a 99.99% probability that the dollar will drop below 100 level. Currently it's at 101. And there is probably a 50% chance outcome that the dollar is going to lose at least 10% of its value this year in 2024. I'm recording this on December 27th, 2023. So dollar heads to 88, 92 area. That's a decent 10 to 13% drop on the dollar. As dollar devalues against the currencies, other currencies, as dollar loses its value, considering that the United States is buying practically all of the physical goods from outside of the US, the buying power to buy the same stuff that the United States is currently buying from China, okay, they're going to lose, the dollar's going to lose 10, 13%. So it would be reasonable to assume, okay, without any other facts, such as oil potentially going to $200, the inflation is very much real. And we're going to be looking beyond an 8% inflation simply based on this chart, guys. Dollar loses 10, 13% of its value, okay? That could contribute by itself to 3, 4, 5% of inflation that is not accounted to currently. Now, the only reason the dollar would go higher if Federal Reserve actually begins to hike rates again. But it has already indicated that it's not going to do. It has already basically said that they have won the fight against inflation. So what would the reason for the Fed to raise the rates at this point? Absolutely none. As a matter of fact, the Fed is in the corner. It's in a checkmate position. The Fed is not going to be able to get out of this situation. The Fed knows how severe current conditions are. The Fed knows that they absolutely have to lower interest rates. So lower rates, as most believe, okay, is a great thing for the stock market to go higher. If you study the history, okay, you have to study and identify the cause of why Fed lowers interest rates. And in this particular case, the inflation has not been won. In this particular case, the lower interest rates will be as the result of Fed understanding how severe the type of economic conditions the United States is about to go through. It's going to have to fight. And lower rates means lower dollar. Dollar drops, inflation goes high. Guys, it's very simple, especially if they're going to try to pump the market with some kind of QE in 2024. That's a possibility, okay? Yeah, temporarily the market can bounce at some point in 2024. That would be the bounce, would definitely be shorted. So, inflation, again, the reason why the Fed cannot conquer inflation with raising rates, lowering rates, okay, is because it's the root of the inflation is very different from your typical type of inflation that could be created by the economy overheating, by printing a bunch of money and that sort of thing, okay? So clearly, at some point, all this money printing is going to have to come to an end. We're not saying that's going to be to 2024. All we're saying, we're going to see a drop in the United States dollar. And that by itself is going to attribute to a higher inflation. The deglobalization, there is a very low probability of oil prices dropping. It doesn't mean oil prices cannot drop, but it doesn't mean they're going to drop and stay lower and continue lower and lower and lower. As a matter of fact, in one of the next few videos, I've got a chart somewhere. I haven't had a chance to insert it in these slides, guys, but there's a moment in the 70s where oil goes from basically $20 to like $120. So that would be 6x. So now it doesn't happen in 1 year, but technically if we're to break it down into 4 years, okay, there's a chance that we're sitting like right in the middle of that move. So there's easy another $150 potential move higher in the prices of oil from where we are right now, which we're trading like in the 70s on oil right now. So 70, 75 area on oil is where we're at. So basically, if you take into consideration the process of deglobalization is increasing at a rapid pace. Okay, dollar is going to take a hit. Okay, the Fed already said they're going to lower rates, which is going to even hurt the dollar more. Other countries are dumping the dollar. They're using their own currencies. The price of oil is going to only add to the inflation. Okay, but that's just this part of the slide. Okay, there's a high probability that the growth is going to decelerate, that the margins that many market participants are expecting to expand in 2024, that is not going to take place, and we're actually going to get the opposite of that. And the employment number, guys, had this unemployment number with a 3 handle for quite some time. I think we will easily see unemployment go into 4 handle, possibly 5 handle. I wouldn't rule out the unemployment going to 6 handle, possibly even 7 by the end of 2024. So we've got a situation that historically is known as stagflation. Basically, that's our base case for 2024, is that inflation, opposite to the normal belief that Fed has conquered inflation. I think we will see a much higher inflation over the course of 2024 and 2025 than most of the market participants expect. So inflation higher, combined with a deceleration in growth, deceleration in margins, and higher unemployment, guys, that gives you a high probability outcome of daily, when we go through day-to-day top trading, gives you a high probability outcome of a move 2, move 3, and move 11. So if you focus on the structure of these moves, the time frames of these moves, as a coach here would explain you at 30 market moves, it's not just understanding the pattern of the move and how it is evolving, but understanding the time frames of the day that allow you for a better entry, better exit, that allow you to understand the sequence of what the next type of move can be. But as you see, predominantly they are red moves. So the market cannot move higher in 2024. Clearly, the market can bounce, maybe slightly, but overall, we're gonna see a pattern that, if we're to combine it with the current pattern, it's gonna be more like this. Let me see if I can draw it. So it's gonna be more like, so right now we've gone through this. Let me use this. So right now in the market, we've gone through this basically in the last 60 days. And I think what we're about to see is going to be this. So overall, this would be a variation of a move 11. Okay, so overall, so today's the December 27th. Okay, so right here, let's say we're right here. The market is at close to 4,800, right? So let's use that 4,800. We're about to start rolling over. Okay, I could be out by a few days, but we're about to start rolling over here. In the next 30 days, the market will roll over. I'll devote a separate video to that, taking you back through December 2017, January 2018, historic analog. But overall, from a macro perspective, guys, we're looking at the years of stagflation. The most prominent years of stagflation in the United States history were 1973 through 1975. Okay, so you can go back and study this time frame in the United States history. These were some major recession years in the United States that are associated with stagflation. Also, years 78 through 79, and the more notorious years known that are associated with stagflation would be 81, 82, which was notably one of the bigger market drops and one of the bigger recession times outside of the big drop that's well known in 87 and the drop in 29. So this is basically what we're looking at. These were the time frames of stagflation in the United States. Okay, during those years, the market dropped off. And I think we're in the early inning of that reversal. There's some signs I've shared with you guys in the last video where you combine the number of trading minutes in a daily session. You look at how fast something goes in one direction, up or down, and clearly right now things are dropping much faster than they are climbing higher, which tells you at any moment we're getting any kind of sell-in if the number of participants on the sell side exceeds the number of buyers. We're getting these sharp intraday drops, and that is likely to continue. So opposed to 2023, where the predominant move, guys, the predominant move was a move 7. That's your 2023. So if we calculate the number of days in trading days in 2023, probably about 45% of those were moves 7. So 45%. I think that ratio is about to change completely the opposite to where predominant trading days. Now, if you study the move 2, 3, and 11, you guys know that it does not necessarily mean, for example, in a move 2, you can have a day start out where it looks like things are perfect, green, and then by a certain time frame, things just start dropping off. If you don't know that time frame, guys, you should go review the 13 Market Moves course now. You know, before the market opens after New Year's, guys, this would be a very critical information for you to understand. Understand how move 3 functions. Move 11, not every case of a move 11 begins with a gap down. So you may have a situation where it does exactly this, where it looks like, hey, everything is fine. You may have like a little pullback in the beginning of the trading session, then things, they look like they're ready to go to the moon again, but by the end of the day, guys, things really fall apart. So understanding variations of these moves is critical. It's going to help you as a day trader tremendously. So focus on these moves. If you don't know what these moves are, guys, move 2, 3, and 11. This is going to be your bread and butter moves for 2024. Review them if you already have the course. If you don't have the course, call us to schedule a coaching session with a coach and get yourself set up with a 13 Market Moves course, guys. So Stagflation is our base case scenario. Study these time frames in the history to understand how to trade this better. Focus on the Fed being completely destroyed in 2024. The loss of credibility by the Fed could create a total chaos at some point in 2024. That is already on some of the catalysts, you know, around the elections. It's already going to be a chaos. So I would say we finished the year of 2024 much lower than the 4,800. If I was to throw maybe a target on year's end, 2024 would have probably target 1 would be 3,500. On S&P, target 2 would be 3,200. So those are our projections. Not without bounces, guys. I'm not saying we're going to go straight down in one line. There's going to be days where things are just going to look like the market is completely done. And the great part of this is nobody's prepared for it because everyone remembers. The market's got short memory. Everybody remembers how the market keeps going now higher and higher every fucking day of the trading week. And people will think, there's people who are listening to this message right now, they're going to think, Leo, you've lost your mind. There's no way we're going to go from 4,800 to 3,200. That is a 31% drop. And I'm saying that considering inflation, considering our base case of stagflation, a 31% drop, okay, 31% drop in the market is nothing unreasonable, okay? So guys, study this, study the move 2, 3, 11, understand the structure, understand the time frames, sign up to trade with the coach, guys. We got some major catalysts that are going to be unwrapping here. First in China on the 31st of December. Got to get ready. We're going to be trading Chinese stocks here in the next 7 days. I think that's where the money is going to be made, is on Chinese stocks. So get ready for that. January 4th is an important day. January 11th and 12th is going to be crazy. So get ready to trade with 13 Market Moves Coach in those days, guys. Let's rock. We will be announcing a trading challenge in next few videos, guys. So get ready. Beautiful setup for 2024. If you're a short seller, if you're not a short seller, get the skills of a short seller that's going to help you make 2024 your best year ever. Let's roll. I'll catch you guys on the next video soon.
First, distract target. Then block his blind jab. Counter with cross to left cheek. Discombobulate. Dazed, will attempt wild haymaker. Employ elbow block. And body shot. Block feral left. Weaken right jaw. Now fracture. Break cracked ribs. Traumatize solar plexus. Dislocate jaw entirely.